Good afternoon. This is Sean Golding with Golding and Golding, here to discuss the basics of the Assurance V, U.S. tax FBAR, FATCA, and PFIC treatment. Quick reminder, the basics of U.S. tax goes like this. The U.S. taxes you on your worldwide income. So if you're a U.S. citizen, legal permanent resident, foreign national who meets the substantial presence test, then the U.S. taxes you on income you earn in any country. You could be a U.S. citizen living in country B, earning income solely from country C, and the U.S. is still going to tax you on all of that income. Doesn't matter that you're not residing in the U.S. Doesn't matter that it's not sourced in the U.S. Now, excuse me, you may have foreign tax credits that are applicable to reduce the U.S. tax bill. You may qualify for the foreign earned income exclusion. There may be various tax treaty laws, revenue rulings, revenue procedures, case rulings, and other precedent, but at the end of the day, that's your baseline position. All income is taxable. That brings us to the Assurance V. The Assurance V is an investment life insurance product. It's primarily offered in France. It's also offered in Luxembourg, and it may be offered in other countries now as well. One of the benefits of the Assurance V is, and we'll focus on the one in France, but the benefit is that it grows tax-free, kind of similar to a 401k, and that's common in many different countries. They have investment vehicles, retirement vehicles that grow tax-free. In the UK, your ISAs grow tax-free. In the US, your 401k plan grows tax-free. The Assurance V grows tax-free. One of the main purposes for having the Assurance V is also to sidestep the estate and inheritance testate laws in France, which are very strict. And by creating an Assurance V, the future decedent is able to identify who they want as a beneficiary, even if that would not be the next in line under French estate law. When it comes to the taxation, excuse me, taxation and reporting of the Assurance V, unfortunately, the U.S. doesn't necessarily recognize the tax-deferred treatment it's offered in France. So the growth within the fund is taxable. If you have dividends, bonus, capital gains, interest, something similar, that's accrued growth within the fund, then it's going to be taxed in the U.S. in the year it accrues, unless it's a PFIC, which we'll get to in a minute. It's going to be FBAR reportable. The FBAR is foreign bank and financial account reporting. We've written countless articles, but the Assurance V would qualify as a financial account that needs to be reported. You also have FATCA. FATCA is the Foreign Account Tax Compliance Act. The U.S. and the U.S. and France have entered into a FATCA, tongue twister there, agreement, which there's reciprocal reporting between the two nations. Irrespective of that, U.S. persons, taxpayers have to report specified foreign financial assets on Form 8938. The Assurance V is not excluded, so it would be reportable. Let's take a minute and discuss PFIC. PFIC is the Passive Foreign Investment Company rules. Basically, under the PFIC tax regime, investments that are considered PFIC, some examples would be foreign mutual funds, ETFs, SICAVs. There's a good chance the Assurance V may qualify as well. You don't get taxed immediately on the growth like you do other investments. Rather, it grows within that fund, and then once distributions are made, you start getting taxed, and once excess distributions are being made, well, then there's a significant tax liability. You get taxed at whatever the top tax rate is for every year that the PFIC investment is being held, other than the current year of which you're reporting the income. When you get taxed on your progressive tax rate, there's also interest for all that time it was sitting in the fund, and the IRS didn't get a chance to tax you then. So whereas the long-term capital gain and qualified dividend is normally either 15 or 20%, with a PFIC you could be getting 50, 60, 70% tax rates. It's ridiculous. If you're out of compliance, be careful. Be careful about some of the garbage you read online. You're not going to prison. Chances are you're not getting hit with any $500,000 fine. There are various amnesty programs that are available. There's the Voluntary Disclosure Program, which is for domestic and offshore, now that the IRS has closed OVDP, which was the Offshore Voluntary Disclosure Program that was closed in 2018, September. If you're non-willful, you have various other options available to you. You have the streamlined filing compliance procedures, streamlined domestic offshore procedures, streamlined foreign offshore procedures. delinquency procedures, and reasonable cause. We have lots of free information available on our main website, goldinglawyers.com. You can always contact us, reach out to schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.